Welcome back, traders. Fed Wednesday is in the books, and as you can see, the market had a bit of a pullback. I gotta say, this wasn't the Armageddon scenario, but it certainly was not the happy path that many traders were expecting. I get this feeling that because 2022 has been such a tough year, there's plenty of investors, traders, that they really want some fireworks and they're really desperate for that Santa Claus rally. Today, we're going to talk about why that may or may not happen, and we're also going to take a look at some stocks that are setting up really well into tomorrow's session. The S&P 500 ended up finishing down 0.64%. The NASDAQ QQQ finished down 0.74%. ARK Innovation was the biggest loser, down 1.02%. Bonds remained bid, as measured by our TLT, and the dollar index continued to sell off. We did have a decline in volatility, and a lot of times this happens when the market has a really sharp jolt higher, but then comes right back to where we started, and that's exactly what's happened so far this week. Volume only finished out at 35.5%. Trend model remains at a +1. Now, let's dive into what actually happened at the Fed meeting. So we know that the Fed was going to hike 50 basis points, and that's exactly what they did, but it's all about the future pace of monetary tightening. And look here, this is by Nick Timros. He's from the Wall Street Journal. He's basically like the mouthpiece of the Fed. 50 basis point increase approved. No changes to the statement. Most officials see rates ending 2023 between 5% and 5.5%. And that is a little bit higher than where the futures market is currently pricing it. Up until this Fed meeting, the futures market was pricing the terminal rate at about 4.9%. So the Fed's pretty much saying, hey, bond market, we plan on raising rates to a higher level than what you're currently pricing in. So at this point, it's like a game of poker. Who's right? Is the bond market right? Is the Federal Reserve right? We don't really know. But Powell still came into the meeting with the same exact tonality. Even though we got a slightly lighter than expected CPI print, he pretty much said, hey, we're going to follow through with our current plan. We're probably going to do another rate hike in January, probably another one in March. But I think what many investors were kind of hoping for is he pretty much says, hey, things are going according to plan, only 2 more hikes, and then we're done. And let's talk about what the future looks like. He is pretty much just putting one foot in front of the other. And it's pretty much like, while we are still tightening, I am just going to only talk about the tightening. We're not focused on down the road, whatever. Inflation is still a problem, so we are still tightening. I think this could all change in a couple months, maybe in March when that last rate hike is officially in the books. Then he will officially say, okay, and after this meeting, we're going to pause. But I think, again, due to that desperation a lot of investors have, where it's like, it's got to happen now, like the market needs to run into the end of the year, I think it did come as a disappointment. And the market reaction was kind of ambiguous. If you look at our sector map, one thing that was pretty glass half full was that the solar sector was a nice relative strength leader, up 1.95% today. The Chinese stocks also had a positive performance, and biotech was also higher, along with cryptocurrency. So when we really look at this dashboard, it's not like it was all risk off. Now, if the Fed had really said something that just completely shocked the market, we would likely see a massive move in the dollar. If all of a sudden the Fed just came out and they were way tighter than expected, the dollar would likely advance. And we didn't see that today. The dollar actually closed with a nice red candle. For a brief moment in time during the presser, we did flip green. But overall, I would say this is pretty par for the course. Doesn't signal any major shock. Our 10-year Treasury futures, same deal here, right? If the Fed came out and they were just uber hawkish, oh my gosh, this is something that we didn't even expect, we would likely see some major gyrations in the bond market. And we did see that intraday, but these 10-year Treasury futures, they closed out pretty strong for the session, right? And we're still in this range after making a very nice run. In terms of the S&P 500, this just remains pretty ambiguous. You could certainly look at this glass half full. And that is what I'm doing because my trend model is at a +1. The market has made a stellar advance off of the lows in mid-October, and the market had a crazy rip higher yesterday on the CPI, but sellers stepped in. We just continue to be in this environment where, again, I think a lot of players are just closing things down for the end of the year. The end of the year dynamics are very different when it's been a bull market year and when it has been a bear market. That's the thing. If you just look at the seasonality chart and you go, oh, the end of the year is usually bullish, whatever, that means it's going to be bullish. You have to think about the reasons for which that is typically the case. and usually it is a reinvestment of profits and or new money coming into the market in anticipation of the coming year. For 2022, it's basically been just like a ton of carnage in the market. So there's a good chance we don't get that same just like run into the end of the year as everyone is, just adding to their portfolios. Everyone's portfolio has gotten bigger. So if people want to take margin, they can do more of that. And you just have like this expanding financial system. In this scenario, it's like people are just kind of like crawling up into a ball for the end of the year. And I mean, the equity action, it's kind of showing that with this strength being sold into. We did finish out above this 200-day simple moving average. We tagged the 20-day and we bounced right off, but we just can't get above this teal downward trend line for now. I'm just trying to approach the market at this particular juncture with a very humble outlook. I've been asked multiple times over the past couple days, what do you think about this like move into the Fed meeting? Like it's green, like, that could mean we're going higher. Or like, what do you think about this and the CPI and whatever? And it's like, until we can really string together a new high, a sustainable rally, some price action that doesn't just get sold into, and we got binary events ahead of us and the market's just kind of bouncing around back and forth. I've been doing this long enough to know that there's not always a signal in terms of the price action. If the market's just like bouncing up and down, you can't just be like, okay, I'm flipping bullish, bearish, bullish, bearish. You just have to be like, the market's not trending. As of right now, these key moving averages, they're really starting to flatten out. So I think it's just important to acknowledge, hey, I might not know exactly what's going on here. I'm going to operate under that assumption. I think the worst thing that you can do is just be like, I don't really know what's going on, but let me do more research and let me make a prediction. No, I think it's okay to just kind of coast into the end of the year and wait for more information. There's nothing wrong with that. On our hourly chart, you can really see just how sporadic this price action has been. The S&P 500 at the beginning of the week was trading right around 39.85 to 4,000, and we zoomed all the way up to 41.80. Then as part of today's Fed meeting, we pretty much like retraced all of those gains, and we ended up bouncing at the end of the session. We reclaimed some of them. So this is really just, very tough action to trade. The NASDAQ overall put in a red candle, but we're also above those key moving averages. The Russell 2000 wasn't able to finish above the 20-day simple moving average, and these past 2 days just look like a complete mess. And the Dow Jones was able to finish out above the monthly value area high, but it also put in a red candle. There were some areas in the market that showed very nice relative strength, and I will say we're at this weird juncture where we've got some individual stocks that are completely marching to the beat of their own drummer, and then we have the indices which are just kind of in this malaise. One stock that was really bucking the trend today was Array. And this stock had a really nice breakout from this monthly value area. We were talking about this one early in our trading room. I did not take an entry here just because I wanted to be prudent. I had a stock that was under pressure today. I ended up stopping out of Tesla, and I didn't want to just keep adding more risk into my portfolio. But this stock looks like a really good breakout candidate. Sedge, which is also in the solar group, has had a really nice breakout. This one's already a little bit extended from those key moving averages, but it's always good to see multiple names within a group that are moving to the upside together. Same thing with Enphase. Enphase is going to make attempt like number 90,000 at this breakout, but here it is. So we're getting multiple names that are moving to the upside. Another very strong group, it's at the top of our momentum list, is the China stocks. I mean, take a look at Pinduoduo. We traded this stock, we added to our position right in here, and then we sold into the strength as it made this really nice advance. This stock, however, it did not end up coming back to reality, and this could really be just a very nice trend for the Chinese stocks. We are starting to get some tightening action. This 20-day simple moving average is catching up to price. So I do think you got to keep this group on your radar. Futu looks very similar to Pinduoduo. We are starting to make these equivalent highs right around the $70 mark, and we're making a series of higher lows. That's a really nice tightening pattern. And if the market ends up going risk off into the end of the year, could be a very good candidate. Or risk on, I should say, excuse me. We're seeing names in other groups as well, like Texas Roadhouse. Didn't close on the highs, but you can see we did break out of value. Ticker symbol BOX broke out of consolidation. It is already a little bit extended, but I do think it's noteworthy that there are stocks like this, that even though the market's just kind of like pitter-pattering back and forth, they are coming out of consolidation. And I'll show you one more. We have ticker symbol CECO. I believe this is like Checo Environment Corp. This one is above the monthly value area. It's just kind of consolidating here, and it looks like it could be on the verge of a breakout. Overall, I believe we are still in a coin flip environment. We have options expiration, and not only that, but it is quad witching on Friday. So there tends to be a ton of portfolio rebalancing, a ton of hedging of large options portfolios. So there tends to be a lot of noise in the days leading up to quad witching, and a lot of times you just get crazy moves. As a trend trader, I honestly don't feel like I have much edge heading into quad witching. And I know sometimes that's tough to admit. I'm here on this YouTube channel. I run a trading group. I would love to just be like, yeah, I know what's going to happen next in the market. But sometimes I think it's better to just be like, you know what? We'll see what happens. Heading into tomorrow, I'm going to try to keep a very open mind. Again, my trend model is at a +1. Heading into tomorrow, my goal is to keep an open mind, and if nothing's going on and the market remains pretty choppy, I'm going to make sure to stretch my legs, get up off the desk, and not get chopped up in this end of year sequence. If you enjoyed this video, please make sure you smash the like button and also subscribe to the channel, and we'll see you all next time.